What's going on, guys? It's Dave with our beautiful Discord squad in here. Nihilish, I see you already chatting in the chat room. What's going on? Hey, all, he says. Awesome art. Welcome, B. Stewie, Jimmy, Bob. What's going on, guys? We just had Dan, Bob, Dan, the greatest moderator alive, just join us. Guys, tonight we're doing something a little different. I highly suggest you pay attention because everybody here, including myself, can all 100% absorb this knowledge. What we're going to be doing is going over the state of the market, and I'm going to keep it short because we're just heading much higher. And then after we go through that, we'll go through the trades that I'm still holding. If you haven't watched the YouTube short already, we'll go into a little bit more depth on what trades I'm holding, why I'm holding them, and where my stop loss is. And then, of course, we are going to do something a little different today. We are going to go over your trades. Whoever's in the Discord, I've asked for you to bring up a few trades, whether it's been 2 or 3 weeks ago or you're still holding now. Make sure you have the ticker, where you bought in, why you bought in, your profit taking, and where you stopped out. It doesn't matter if it's a winner or a loser or where you just want to talk about it because you messed up. We all can benefit from this. I want you to swallow your ego, swallow your pride if it's a loser, and I want you to talk and gloat and be happy about the winners if you have something to talk about there too. So either which way, okay, guys? So, and one last friendly reminder for all the people that are in the Discord, you're more than welcome, as long as we're on the subject, to interrupt me with whatever we're talking about. So if I'm bringing up the S&P 500 and you want to know, hey, what about this? What about that? Whether it's a charting question or any type of question whatsoever, you're more than welcome to interrupt me. If I'm going through my trades, interrupt me. Don't be shy. We also have the chat up, okay? So that's what we're doing. The S&P 500, this is the state of the market. Why do we go over the state of the market? Why? Dan Bob, you got a question?
Yeah, share your screen.
Oh, let me share my screen. Thank you very much, Dan Bob. Appreciate that, brother. There you guys go. All right, click the live button right there. You guys can see my screen in Discord right now. You can't see my ugly face, but you'll at least be able to see the screen that I am sharing. Now, what you guys will want to see here is the S&P 500, okay? This S&P 500 is absolutely gorgeous. We talked about this 500 low, and why do we look at the S&P 500? I think we all need to understand that. If the S&P 500 is heading up, the stocks that you are in should perform well, especially if you're in what we always tell you to get in, the RS stocks, anything above 90. What is RS? Relative strength. They compare the relative strength to the S&P 500. So if the S&P 500 is heading up, your high RS rated stocks should be heading, if not even higher, okay? Then when it pulls back, your relatively strong stocks compared to the market should not pull back nearly as hard, okay? So keep that in mind. Why do we go over the S&P 500? To know the state of the market, to know and understand when is a good time to get into those trades. Right now, we are extended from the 10-day moving average, okay? Now, we could continue to stay extended, just like we did way back here. We stayed extended. Then we have a big pullback, right? Still above a 21-day moving average. Then we get back extended. We stay extended. We pull back. And this 21-day moving average is my key area. We are well above that 21-day moving average, and we have plenty of room to pull back or trade sideways and let it catch up. So I love it going higher. I say rip tater chip. You guys know that. But we always need to keep in mind that we are extended. If we are extended, we need to be extra careful, okay? So that's the S&P 500. Now, the big question in the market is, what about the breadth? What about the breadth of the market? Well, we're going to go through that. The QQQs, we don't really need to even take a little peeky gander. It did not make new all-time highs today, but the S&P 500 did, so that is interesting. The IWM, which is the small and mid cap, did get that pop yesterday, which is a great sign, but we're still below a 50-day moving average. So we are downtrending midterm in the IWM, or the Russell 2000. So we're not seeing too much breadth there, but what about the RSP, the equally weighted S&P 500? We are now above all moving averages. This is a beautiful sign. Now, of course, I would like to see it continue. I would like to see breadth in the market continue, because I had you guys come together with me when I said if the S&P 500 is doing well and everybody's so worried about the breadth, imagine if the S&P 500 continues to do well and then the breadth in the market starts to rise with it. Imagine the epic bull run there. Set aside all the debt crisis and, the election season and, yada, 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 all this BS that's going on. Let's just imagine in a very positive attitude what could come, because we already protect ourselves using risk management. You should always protect yourself using risk management, because if something crazy like this does happen, guess what? We stopped out, we're done, we're hands off, we're reassessing the market, we're gonna find the momentum, we're gonna find those leaders, we're gonna find the hot sectors, and we're gonna get our asses back in and play those trend trades. Okay? So let everyone speculate on the downside. We wanna find where we are headed on the upside. And if we are risk on, then we stay risk on. The breadth in the market, imagine with me for a second, we continue higher. Imagine with me for a second, we trade sideways for a week and then continue higher. Okay? Either way, the S&P 500 is telling me we are still risk on. Now let's look at the VIX volatility index. This is the fear gauge in the market. Okay? When we look at this, we ask ourselves, where are we at? Right here, this was the Middle East tensions. If we zoom way out here, this was COVID. Okay, this was the pandemic. And if we zoom out even further, you'll see this is the 2007 financial crisis. Okay, so we don't want to be up there, right? That's when everybody sold off on their stocks. That's when the market was having a rough time. Now look at this. I said rough like I'm a dog. Now we're heading in this right direction where we want to stay at an even keel. People don't have the fear any longer. If you don't have fear in the market usually gradually heads higher. That's what we're seeing here, okay? So I do like the VIX volatility index. Now, there's so many things that we could go over, but that is keeping it simple, stupid. KISS, keeping it simple, stupid. We go over the S&P 500, we go over the QQQs, we go over the IWM, the VIX volatility index, and the breadth of the market. Why should we confuse ourselves with a whole lot of other things? That is the state of the market. So to sum it up, the S&P 500, it is extended. It's going to be hard to find good trades in an extended environment. That's why we talked about finding those trades here, and we found plenty of those trades. That's why we talked about finding trades right here when I talked about bouncing off the 21-day moving average. And if you guys were with me, some of you not as long, we bought right here at that $500 psychological and technical area for that bounce. So we were anticipating getting above that 21-day moving average. Each one of those times have made me plenty of money. And guys, I'm not here to brag. I'm here to show you I have a process that works. It works, damn it, and you can make it happen for yourself too. Now, there's a lot of other things that will stop you from making money, and that is usually you. You know what you've done. You know who you are. You need to be very careful with the trades that you take. If you don't have a process, if you're not using risk management, if you're not following the process that I have put in place for you, or you haven't found your own place or your own edge in the market, that's okay. Risk small, paper trade. I don't care what you do. Protect your capital first. Now, let's go over the stocks that I am in currently, and then it's all about you. Dan, Bob, Dan, the greatest moderator alive. Do you have a question?
Yes, I do.
Let's go.
So the WMI, is that what you said?
The IWM, it follows the Russell 2000, which is the small and mid-cap stocks.
So is that more small caps or more mid caps? Or?
It is small and mid-caps, yeah. So while we're on it, I'll just look up what is in the IWM, and we can bring it up. What does so SMCI, MSTR, FIX, ONTO, Carvana, ELF, FN, ANF, Abercrombie & Fitch is actually in here. So let's see, what are the top components? The top, well, I just read the top. Let's see what else is in here. APG. ATI, Matador. A lot of these you guys haven't heard of because they aren't the mega cap stocks. You know, usually it's your Amazons, your Metas, your Teslas, your your NVIDIAs, all the ones that have all the attention. They get all the clout because they are the big guys. They are the ones that have succeeded. Apple, you know, it's these small and mid cap stocks that you don't hear too much of. Now, you've heard of the bigger holdings, and SMCI probably isn't going to be in this any longer because SMCI is getting to be too big of a stock to be in this. But we can also look up what size market cap is in the IWM. And when we look at that, let's see if we get a quick answer here. Nope, I'm not finding it right away, and I don't want to spend too much time on that. But Dan, Bob, Dan, if you'll do that quick Google question, we can know the exact market cap that it usually keeps it in. But I do know it's small and mid cap. It's small and mid cap. So maybe you can get a definitive answer for me while I carry on. Can you do that?
I will do that.
Thank you, kind. Thank you kindly, good sir. So guys, what we're going to look at is the stocks that I've been holding, and you'll see they are still all the same stocks. The only thing new I've added to this is NNE, and we've added this 2 days ago. But we'll start with ANF since we brought this up a couple of times. Now, I've played ANF on this trend break. You guys are going to see I play trend break strategies, I play base breakout strategies, and I play episodic pivots. Those are the only 3 trades I play, and I play them all pretty much the same. I have a process, I have it in place, and the only time I don't play my process is if the S&P is below a 21-day moving average. If I'm speaking too fast, well, you keep showing up to these, and I promise you, you are going to be repeating these in your sleep. I do. I dream about it. You know, I sit there and mumble 21-day moving average in my sleep now. So if you guys keep showing up, that's part of it. You're going to learn exactly how I trade, exactly how I keep myself safe in this market, okay? And if it doesn't work for you, that's okay too. There's plenty of other ways to do it. I'm not saying my way is right for you. I'm saying my way is right for me. So Abercrombie & Fitch, you can see we had this beautiful trend here, and I can just shrink it down. We can make it look real pretty. You can see I just pulled this trend off the top of these wicks here. I found a nice trend when we broke up above it on volume. I decided to take this at 171.78 as it broke up, and I achieved 2 risk multiples on the stock, meaning my stop was this low of day, so it was actually a much higher risk than this. I've made much more money. So if I was risking 0.50 and we were up here at 632, that's 246, that's 6R really, before I took out half of my shares. Now I'm just holding on to the last half of these shares. Okay, so I made my money already on this stock, but I'm still holding 50 shares and we're still up $670 on this. Why haven't I stopped out? Well, if you guys have been with me long enough, you'll understand that this is the 10-day moving average. It has not closed. It has broke down below it, but it has not closed below it. And Dan, Bob, Dan knows that that is my biggest weakness. When it starts to break below, half the time I just want to sell because I don't want to lose the rest of that money in there. But I have found, especially in a very strong market, why would I do that? I want to give this the most time I possibly can to let the momentum of this stock play out. And if we go back to the history of this stock, you can see a lot of the times it does like to close below it and then, or not close below it, break down below it, head up higher, break down below it, head up higher. You know, there's multiple times right here. Here's another example, breaks down below it, heads up higher. Look, could you imagine if I would have sold right here? It never closed below this area and then it continued higher. This is too tight for me to want to sell there, right? Give it some more time. This right here, sure, I would have sold, but I would have made a much bigger percentage, another $5 per share. Okay, so I'm giving this time, especially because history has told me on this stock, we bounce off that 10-day moving average. So that's where I'm at with ANF right now. We are sitting right here, and you know what, guys? I have had a hard time not adding into this because I'm seeing this like this, another trend. So let's move in on the hourly to see, is this looking like another trend break where I can add? Ooh, look at this, guys. Let's just take a little peeky gander at this beautiful, beautiful thing. So if I just go ahead and put my trend line, top of the wicks, okay, I'm ignoring some of that pre-market action right there. Top of the wicks, look at this, guys. This hourly, oh, you know, and if it breaks out above this, it's close enough to this 10-day moving average down here that I might just go ahead and take another 50 shares right here if it breaks up above 186. Now, do keep in mind, tomorrow we have the day off. We're going to go into a much cooler way of doing our Discord chat tomorrow. But that being said, you know, the market is closed, but we're still going to study. We are still going to focus. It's going to be a great refresher course on one of the great traders that are out there. Okay. We might do some reading. I don't know. Either way, let's see, tomorrow's Wednesday. So Thursday, if this breaks above that area of 186, the psychological and technical area of 186, because look at this, guys. Look at this too. So if we look at the hourly, look at right where my alert is. You can see pre-market bonked its head, opened up, boom, bonked its head at the end of the day, broke up above it, broke down below it, boom, bonked its head on it, broke up for a second, pulled back, bonked its head on it. This is a base. We're not going to call it a base, but this is a resistance level and it is a trend level on the hourly, okay? So it gives me further conviction. And on top of all of that, it is a new higher low. 180 is our low. 181 is our new higher low. Maybe we even come down one more day and hold a new higher low at 183.50. I don't know. I don't know what's going to happen, but if I give myself different scenarios, then I won't get taken by surprise. All I know is if it holds a 10-day moving average, it doesn't close below it, and breaks out of this area after having an inside day and getting tight, I might want to get my other 50 shares in and hold more of this stock. I've already taken out here a quarter of my shares and taken out here a quarter of my shares. Excuse me if I told you I took half here. I took I took quarter of my shares at 178, a quarter of my shares at 192. Okay, so I might want to take more here. ASTS, this I played on the hourly. So if we look at the hourly, we'll just look at the hourly completely here. If we look at the hour, the green lines are where I take, the white lines are take profits, the yellow line is where I added, okay? So if we look at this beautiful, beautiful stock, we can see I played this trend break, okay? And if we zoom in even further on the 5-minute, you'll see I played a trend break right before the trend break. That's how I got such a good price here, guys. I seen a trend right within the second trend. That's kind of a little bit more advanced. I don't want you guys to really focus on that too much, because either way, if you would have bought the stock right here, you would have been just fine using low of day. This was a absolutely monstrous breakout, guys. You got to love this beautiful breakout. Zamora, I see that you just joined. Welcome, Zamora. Good to see you. I'm so happy you're here. So we have this beautiful trend breakout, and if it breaks above this trend area, we want to hold on to this, and I did. We ended up taking, so guys, I took a pretty hefty share size into ATST because I knew it was a fast mover. I took 900 shares here at 786. So right when I got to 1R, I sold 300 shares. I sold another 300 shares, and I held on to 1/3 because I felt more comfortable holding on to 300 shares. Now this thing traded above this price for a while, came back down after finding some resistance. It did this like quick flood price, but I didn't have my stop sitting there. I just had it sitting down here. The 10-day moving average was much below at the time. Then it bounced right on up and started heading higher. Now, when I seen this, there was another trend break right here. If you look on the 5-minute, you'll see it was much, much cleaner. Actually, I'll bring up the 5-minute since we keep talking about it, guys. All right, so this is the original trend break. Here is my pre-trend break. That's why I bought here. You can see a trend within the trend. So I decided to take it here. Beautiful. And look at the volume too. Hence the sell-off volume is declining and the buy-in volume is much, much higher. I take it, 788. It heads up higher. I sell a little that same day, and now my trade is scot-free. All right, then we move on further and we can see another trend break, and you'll see why I added onto this trade. Look at this beautiful trend break. We get a big push up on volume, big, huge. Look at this push up, beautiful. We get another trend forming on what? deteriorating volume. Look at the volume deteriorate on the sell-off. And then it wicks down right onto that VWAP area and gets bought right back up. Look at the volume starts coming in. The volume starts coming in. I played the trend right here and I watched it really close. Really, really close after I bought it. And then boom, look, that is the buy-in. That's the volume bar that you want to buy in right there. I just took it out on the trend break because I had another 300 shares. I had some wiggle room, but this is really where the buy-in is because that is where the volume came in, okay? And then it started to head higher. So now I have 400 shares of this, okay? And let me go back to the daily. All right, let's blow up the daily for you. And look at, I added here, and now we are just rip, tater chipping to the north side, baby. It's an easy hold. We had a pullback today, look at. So I'm up $1,320 on this. We pulled back, I lost $100 on this. You think I'm sweating this trade? Hell no, I am not. You know why? Because even on my add-in, if this comes all the way back down tomorrow and closes below the 10-day, I have still even made money on my add-in. I don't give a crap what happens to this stock. If I come here tomorrow, Thursday night, and I see that after the hours it has closed below the 10-day, I wash my hands of this trade and I am done. I'm done with this trade, okay? I have a $400 or my 400 stop loss down, just down below here sitting in case this thing really washes out because it is a 16.7 ADR stock. This thing can do some pretty serious damage. So if at 16%, here's 16%, it would still be above a 10-day moving average if its full moving average pulled this far back. But just to be safe, something like this type of move happens, I want to save face. I don't want it to wash out. So I just have a stop loss so I don't have to watch it, okay? And then, of course, NNE. Guys, I don't really need to say much. This is absolutely beautiful. Your boy Covey pointed this out to me the morning of this. Actually, I think the day before. It was the morning before this happened. He pointed this out. I agreed with him. This is absolutely picture perfect. And then when we had volume come in, we played it. Everybody was there. And I know, Dan Bob, you probably are sick of me bringing up NNE because you had a rough time. But it's great that you can learn from this, So we sold half at 2R. I wish I would have bought as many shares as frickin' Covey did. I did not. I only risked 1% on the account, but regardless, that is the way I like to do it. Risking about $150 on this trade, using that low of day, playing that momentum breakout on volume. Now look at this beautiful volume, guys. This volume 3 days in a row, we are up to new all-time highs on this. Do you know what's overhead? Do you know what's above this? Nothing. Not one person has a share to sell us if they are holding a bag. Nobody's holding bags on the stock. This stock can literally go to the moon. Now, I'm not getting you hyped up so you can buy this. It's extended. I would not buy up here myself. I would never add into this, but I will hold on to this stock until it closes below that 10-day moving average. Okay? I've already made my money on this stock. This can come all the way down, close below this 10-day moving average, and I would still make my money on the stock. But as long as it keeps on going higher, I'm going to keep on making money. So on this last half, we're up $816. This, without even looking at the market, profited me over $538 today. And I was hands off the market. This is the systematic trading that I'm trying to get everybody involved with here, okay? Then, of course, we have NVDL, which also made another $156 for me today, or on my last 1/8 of this position, $901. On the last 1/8 of this position, almost a G on 1/8 of a position. Could you imagine if I was holding the full position, or better yet, under Danny's recommendation, at least half of this position? If I was holding half of this position, I would have at least $4,000 right now extra. A minimum, $4,000 extra on this trade. But I was worried about the pullback, so I sold off more. So now my rules get stricter and stricter when we're in a more bullish bull market and I have a trade that's put on that I'm confident in. I hold on till the break of the 10-day moving average, and I will always hold half of my shares for that. I will always sell half, whether it's a quarter and a quarter, but I will from now on always hold a minimum of half of my shares until the break of the 10-day moving average. That's that. I'm washing my hands of that and it's done, okay? Now, guys, I just talked your ear off for 27 minutes. I said I was going to take 15. That's just how it works, right? Now, I'd love to go over your trades, and I want to go in depth in these, and I don't want anybody to think that I'm picking on them. If you bring something up and I don't like it, I'm going to tell you, but we can still go over it, okay? And I'll tell you why I don't like it, and maybe we can learn from it, or maybe you can explain something to me and I can learn. But I would like a volunteer. Anybody willing to put themselves out there and give me a stock that they would like to go over?
If I could just add something real quick,
Sure.
just to take notice, on NVDL,
Yeah.
you're also in a territory where there are no bag holders above you.
Let's take a look. Woo, there ain't nobody up here. There's not one damn person up here. And the last time there was nobody up here was that break. And if you guys remember, now that we had a stock split, it's different. But if you look at NVDA, it was the $500 break. And I talk about the $500 base break all the time. It was right here. It looks the same on NVDA. There was nobody above that. And we had a 6 months consolidation at this $500 break. I'll never forget this, guys. I told everybody about this. Look at this right here. It's now called 50 because of the 5 to the 10 to 1 stock split right there. Look at this. Look at boom, boom, new higher lows. Here's a low. Here's the new higher low. Here's the third higher low. That's why I talk to you guys all the time about that base freaking breakout rip tater chip. When I bought it right here on this volume break. This was absolutely beautiful. And guess who was above us? Absolutely no one. And again, thank you for pointing that out, Predator. Absolutely nobody is above us. So sky is the limit here. Sky is the limit. The only time I'm really gonna wanna sell out, and I really can't bring myself to do it, is when you see things go parabolic like this. So this is SMCI. We got so far extended from that 10-day moving average, I consider this parabolic, okay? One more day, I would have had a lot more people agreeing with me, but we see gap, even bigger gap, and just ripping straight to the north side. I even called my buddy who owned a lot of the stock. He made over like 8 grand on this in 2 days. I just told him, I said, hey, I don't know what your game plan is, but this is looking parabolic to me. If you haven't taken profit, you might want to think about doing that. Oh, if it comes back down, he says, if it comes back down, I plan on buying more. The next day, it came all the way back down here, and because he held on to it for 2 days, he was still up. I don't know how much he was. I'm just kind of bullshitting my way through this, but he sold. Oh, I sold everything. I said, I thought when it pulled back, you were going to buy more. Well, I want to make sure I had profit. And I said, okay, well, you told me your game plan was when it pulls back, you were going to buy more, and he didn't. He didn't do it. But look at this trend. Look at this new trend and a base and another trend breakout. So anyway, guys, let's go over something, guys. B. Stewie, you want to go over your ARM trade? Talk to me, guys. Don't be shy now.
Yeah, absolutely. I'm trying to look through my notes right at the moment.
I think I already have your where you originally bought it at 143.33 marked out on my chart.
Yeah, it's
now, guys, when we look at this, while B. Stewie's figuring out his buy area, I do want to point out ARM had a beautiful trend break right here. Okay. Now, a lot of people won't agree with this trend break. Just because of, where it was. It had this big breakdown. I actually made money selling this short, this breakdown here. Not as much as I should have. But look at this. Once it gets back up to its trend, all the moving averages start to form right before it takes off. The 10's over the 21, the 21's over the 30, and the 30 is over the 50. Now, we didn't get that curl until after the breakout, but this is what I mean. It's very, very powerful. Once it broke above this, it came back, and you guys will see this a lot. It came back, it retested this trend breakout area, and then it ripped to the north side. It was absolutely beautiful. This right here was the absolute best place you could have bought this stock. Right here. The best place you could have bought this stock was 122.99. Okay. B. Stewie?
Yep. What did you have done for me?
143, the 143 area.
Yeah, I'm having technical difficulties here, dude.
Hey, it's all good, man. I know that you're trying to do a lot of this on your phone right now. But I'm just going to go over it because I'm familiar with this, okay? Now, I told B. Stewie to, we had a little chat, like a one-on-one after. Go ahead.
No, I just took I bought only 10 shares.
Okay. So when we talked about this, and B. Stewie doesn't mind me putting him on blast, he's still learning. I mean, we're all still learning. But when he bought this, I told him, hey, look, it's extended. It's extended from the 10-day. I don't care for you buying this up here because it's extended. Now, he was playing an hourly trend break, and so he felt comfortable doing this. And look at this. I mean, it's still continuing higher. It's in a hot sector, right? I don't agree with where he bought. I think this is the buy area 100%. I would never buy this unless I had that fear of missing out, or if I was taking an hourly trend break, it would be on an intraday, meaning I would sell pretty much 90% of my shares after that hourly trend break, okay? So it is extended when he bought, but I want to say, congratulations. You bought it on volume, higher than average volume, and it's nice to see it continuing higher for you. So ARM is a beautiful, beautiful trade from down here.
Yep.
Predator, I'm going to put you on blast. What about, is it SISI that you played?
Yeah, I have to look at my spreadsheet to see what my entry is, because I don't commit this stuff to memory.
Man, you guys, I'm giving you a one-on-one, and we don't have anybody in here. I'm not trying to give anybody shit, but
I have a few bad trades, but
if I
gotta look at my spreadsheet.
If I would have had this when I first started trading, for me to just say, hey, look, this is what I have, and give it to them. I reached out to so many people. This is a big reason why I started this Discord, is because I would reach out to so many people and nobody wanted to help new traders. Nobody wanted to do it. And I really, you guys really should take this opportunity, because this community that we have is absolutely amazing, to go over these trades and to figure out what's going on, know what's good, know what's bad. It really is a great opportunity. And I would love for you guys to utilize this a little better. Now, when I look at SISI, the first thing I see is this trend break right here. Little extended from the 10-day on this trend break, but look at this volume. Huge volume coming in, a big push up, and then a pullback. It creates this trend. Now, I don't care for SISI, because if I look at the RS rating on this, and if we look, it is a pump and dump stock. But just because we were talking about something that Predator played, he likes these because he has a small account. And so these are small account advantage trades. Okay, you can buy a lot of these shares and you can double that account in a very, very short time, but you have to use risk management. So if you're buying something like this, you need to make sure you're using that low of day. Well, if you guys don't have any trades that you want to go over, I'm just going to run through my watch list really quick, and then we will see what we have popping. So JMAI was pointed out to me by Danny yesterday, and it started forming this nice trend. It broke down here. I don't care for it now because this is too big of a pullback on too much volume. We also have SMR, which I know we've all been watching SMR. This is absolutely beautiful to see. Now, it broke out today, and it broke out on volume. What my question is, because I didn't really do too much of an analysis on this because I was out doing my thing today. We had a trend break within a trend break. I tried this, and look it. I tried this, I got in, and it stopped me out at this low of day, okay? Right here. So it stopped me out within, like, what is that, 15, that's it, like 10 pennies, guys. 10 or 11 pennies. And then look, it come back up, traded sideways, and rip tater chip on higher volume. So I almost had this stock as well. I almost did. Now look at, there's the real trend break right here. And I was not in front of my computer screen to take this trade at 922. But I'm pretty sure Mo Wealth actually called this out. And it was beautiful. It was beautiful. I seen it right here. And I said I wanted to give it some more time because it ran right into this and then just started trading sideways. I didn't set my alert again on this or nothing because I was out and about, not in front of my computer, which is totally fine. But look at this. Look at this. It broke back up through on more volume. It broke through. This is the trade right here, guys. This is where this should have been bought. Right here at the break of the top of this, or right here. You know, right when you've seen this big volume blurb come in and break that trend, this would have been the buy-in area. Now, I will say I'm willing to buy this again if it wants to come down here in the pre-market. I might take a few shares of this at 925 because this is a very solid area with all this volume coming in. This is still an opportunity trade, okay? So I might be able to take it risking, you know, low of day, or maybe taking an opening range breakout on this trade, which if you don't know what it is, I'm not going to go into it tonight. But an opening range breakout is just taking after it breaks the 1 or 5 minute candle at the open of the market, okay? So this is still tradable, but we need to wait, obviously. We want to wait until Thursday to see what happens with this stock, okay? So I really like SMR. We have BRCC. Let me zoom back out onto my daily. Why were we looking at this? Well, this base right here, and I'm just going to reset my alert right here on this BRCC. I like that it's following this 10-day, and it's forming a nice base up top here. It's looking pretty damn good.
This was one of my losers.
This one right here. So did you take that break?
I took VRCC at 633.
VRCC or BRCC?
Yeah. BRCC.
Yeah, BRCC. Did you take that 2 days ago or did you take that today?
No, it was 2 days ago.
Yeah, 2 days ago. So dude, I'm going to tell you right now, that was a good buy. That was a good buy. Right here it is. And we went over this, actually. We went over this yesterday. So guys, take a look at this. This is on the 1 hour. Let me throw this on the 5 minute. This was a good buy. And you got to understand, not every trade is going to work out. But as long as your process stays keen, this is absolutely beautiful. So in the market open, this thing shot up on volume. This was a buy. If I was there to take this, but I seen it late. I seen it too late. And when I came back, it was already broken down. So I didn't end up taking this. So I just lucked out because I would have taken this trade. So that is a good loss, B. Stewie. 100%. That's a good loss because you might take 4 or 5 of these losses, and then that one good trade that you do take on these is going to make up for all those losses and then some. That's part of trading. That's part of that trend breakout strategy, okay? A lot of the best trend break strategists, for example, Chris Quilamagi will tell you he only has a 30% win rate. How do you make money on a 30% win rate? Well, your losers are small and your winners are enormous. He's shooting for 10x. If you're losing 1R and getting 10x, that means you can lose 9 times in a row, and that one winner is going to make up for all of those losses and then some. Okay? So do keep that in mind. So great process here, B. Stewie. Great process. I would have bought it right here, right at the market open as well. So I like it. Now it's still setting up. It still has an opportunity to break out again. And if it does it on volume, I'm willing to try it again. So we also have SMMT. I'm just seeing this for the first time. So if we look at this, you can see it's getting really tight on that 10-day moving average. I still like it. It's still on my watch list. I'm going to reset my alert right here for 8:45. That is the watch for the breakout area. GME, I was very excited for GME. That still has an opportunity. It's still setting up here, okay? It really is. I mean, if GME really gets some volume and starts to head on higher, but if it breaks this area, breaks this $24 area, it really has a chance to just flush out and die, okay? But I still have hope for this. I really do. I still have hope for GME. It's a good mover. Am I going to just buy in blindly right now? Hell no, I'm not. I'm going to wait for what? Trend or base breakout. And it's forming a trend on the stock. It really is. It's forming a nice trend. And if it breaks out of this trend, I'm willing to risk $100 to see where this might take me. I really am. I think it can at least get back up. Well, actually in pre-market, it sold off at like $50, $62 area once already. So I think it could get back up there at least if it does break out in this trend. If it does. If not, the first thing it needs to do is get past this $40 area. All right. So do keep that in mind. I do still have GME on my watch list. BNAI. Now I'm not liking this now, guys. For a long time, I really like this. I really like how tight it was here and how even tighter it was at 408. But now that it's broken this 10-day moving average, I don't like it anymore. Now, if it stays trading sideways and gets tight again, I might take it in the future, but it's not an A+ setup. Okay, this looks a lot like NNE right here. Look, see how tight that got right here? But NNE broke higher, so we took it. BNAI, it broke lower, so we aren't going to take it. We're not buying hope, you know. We're buying momentum, right? We're momentum traders, okay? So MAIA also broke this 21-day moving average. I don't really care for that now. RYAM, look at this. I didn't take this. Did anybody else take this? That's a nice that's a nice base break right here, okay? I don't know what it did on the 5-minute. We could take a look on the 5-minute right here. Look at this. Right at the end of the day, too. That volume started coming in. Nice base breakout at 575. And now it's gapped up to $6. All right. So we got to be careful with that. We missed that. The end of the day is, you know, pretty tough. And I also have TMDX on my watch list as well, just because it's really just trading right at that breakout area. So if it wants to break above that area, I'm willing to take that base breakout as well, because it is following the 21 and 10-day moving average very tightly, and it's at that pinnacle spot where it's either make or break. All right, so those are some to keep on your watch list. Do you guys have any questions for me? Anything that you want to go over? I really wanted to make this about you.
And what curve,
Dan Bob?
Curve.
CURV. So I've been watching Curve since you brought it up. You know, it put a bad taste in my mouth, the earnings. It really did. So earnings came out very profitable. Like, they were only expecting 7 cents and they came out 12 cents per earnings per share. That's great. I mean, that's really good for Curve. The issue is all of this wicking. I didn't like all that. So if we can eliminate this candle, act like it's not there, I'm going to say there's a buyer down here. It's getting bought up at 621. A buyer keeps buying all this up, and you can see it on the daily wicks. It won't get sold off. It keeps buying up, sold off, bought up, sold off, bought up. So if we set our alert at $7, okay, and I still think Curve has the ability, CURV, it's on my watch list, and if Curve breaks the psychological and technological area of $7, I still think this is in play. I really do. And I remember you bringing this up too. And if you look at it on the daily, okay, we have a 200 that's sloping up. We also have, you know, all the moving averages in line. And if you zoom out here, you can see that this is a huge cup. So this is a completely new trend. If it gets above that $7, it's got a whole new trend, okay? Now, one other thing I like to look at too is I like using anchored VWAP on these. So if we use CURV on my trader view and we zoom out here on the daily, you can also see if I pull let me get rid of this really quick so we can see better. If I use this anchored VWAP and say we throw it here, look at this. Look what happened here. So this is a most recent high, and we also can pull another anchored VWAP from its most recent low right here. Let's see where these line up. Look where that earnings bounced off of. See that? This isn't magic, people. The earnings sold right off and grabbed the anchored VWAP of not only the previous highs, but also the previous lows. That is not, it doesn't just lock into that. No, this is the anchored volume weighted average price of the recent highs and the recent lows, meaning anybody who bought after this and anybody who bought after this, their average price is right here on earnings that got pulled right back down and bounced right back off of it. You see that? That's a beautiful sign. So it's showing that there are buyers buying this thing up. Somebody likes this stock. So I like this stock too. Nylish says, holding SHOP, Intel, and Sunoco, all in red. Can you share your insights on them, please? Sure, I can happily do that. So SHOP, I can clearly see you're not following the process. Why? Because the first thing I see here, and you know, Nylish, I'm very, very just, you know, I tell you how it is. So don't be mad at me. You know, I love you, buddy. You're one of the OGs. So just hear me out. If you watch the trend break in the base break strategy, I would never tell you to buy a stock below a 200-day moving average. I would never ever tell you to buy a stock that's trending down. ever, right? So why you bought this POS stock, I have no idea. I have no idea, especially after a huge gap down on earnings. I have no idea, okay? So if you want my insights on SHOP, it says SHIT, okay? This is not something that we're trying to buy here, okay? Intel, is that INTL? What's Intel? INTEL? Intel. Is it IDN? No. What's the ticker symbol for Intel, guys? For Intel.
Any in this house, man.
INTC.
Yeah.
Thank you, Jimmy. Appreciate you. Okay, look, I already have Intel marked out here. And Dan, Bob, if you'll make sure whoever's mic's hot, you get rid of them for me. Or not get rid of them. Oh my gosh. Don't get rid of them. But you know what to do. Just mute them for now. Okay, thank you, Nihilish. Thank you, Jimmy, for that ticker symbol. So look at, I even have this marked out here. I don't know where you bought, Nihilish. I don't know what your buy-in area is. I don't need to know. All I know is that I had this marked out right here. You can see a beautiful uptrend on this thing and a beautiful triangle starting to form. But after it broke down right here, you can see that we were having some issues because it's below all of its moving averages. It tried to come back up below all of its moving averages. It tried to come back up and then broke its uptrend. And it sold off hard and it sold off fast. I would never recommend any stock below a 200-day moving average. Okay, so absolutely do not ever buy anything like this. So if you bought at 37, I'm assuming this was 2 months ago when you bought this at 37, somewhere in this area. You're trying to catch a falling knife, brother. Don't do that. Do not try and catch a falling knife, Nihilish. That's why I want you to watch the base and trend breakout school. The strategies that I have put in place for you so you don't get caught buying pieces of shit stocks like this that are failing hard and fast. And then on top of that, you held before earnings. If you held at earnings, that's a gamble. You're hoping that this thing gets up here. Don't ever hold and hope, brother. We don't ever want to see you do that. Now, I can't protect you. I only can teach you what I do. And right now, this is not something that I would ever do, especially a breaking on this trend. Below a 200-day moving average, that's the first thing I look at, okay? So don't listen to analysis, or analysts that are out there upgrading stocks or downgrading stocks. Don't listen to the news. Don't listen to anything. Use technical analysis. Is it above a 200-day moving average? Is it making new higher lows? Is it trending on a 10, 21, or 30-day moving average? Is it a relatively strong stock in the market? If we look at INTC, I guarantee this is one of the worst INTC. It's probably the worst RS rating we have ever seen. Let's take a little peek. 16. That's far from 90. We don't buy stocks like this. What's the ADR? 2.5. We don't buy stocks like this. They're too slow. Even if it was moving up, you're not going to make any money on the stock because it moves too slow, okay? So absolutely not. You know I love you, but don't buy shit stocks. And Sunoco, I can already tell you the Sunoco, guys, there's a reason why we wouldn't buy Sunoco. And the very first reason why is because if we look at XLE, we're looking at these ETFs so we know what sectors are hot, okay? I can understand Intel isn't a hot sector, but it's not trending. XLE or Sunoco is in XLE. It's an energy sector. Energy is trending down. Energy is not a hot sector anymore. It was here. We talked about energy being a hot sector all through here. We did. We talked about energy being a hot sector here. But after we started to break down and form new lower lows and new lower highs, I said energy is not a hot sector anymore. So I don't even want to look at Sunoco because it's too slow. And I guarantee it's well below a 200-day moving average. And if it's not, you don't want to be in it because it's in a shit sector anyway. So Nihilish, first and foremost, thank you. Thank you for asking. But I think you really need to watch my trader school. It's on YouTube. Just click on my YouTube. It's the first thing that pops up. Watch and study the trend break strategy. We do trend break strategies. We follow momentum. So that way we don't get stuck in shit stocks. All right. And excuse my French. I've been practicing. Oui. Who's up next? I know that's a tough one to follow because I just was really mean to Nihilish, but it's the truth.
I got a good one and I got a bad one for you.
Let's go.
But I have 3 bad ones. to give you a good comparison of the
Well,
when one lose many.
let's do the
Okay,
one
so
good one. How about that?
first one is CC. Yeah, the first one is CC.
All right. Well, we
All
went
right.
over CC, right? We already kind of went over CC.
Right.
If you want to,
Yeah.
we can
So
go over it.
well, just for the sake of knowing, for them to know what my entry was and all that nonsense,
Sure.
I took it based on the daily.
Yep.
From what I thought I saw as a bounce off of the 10-day, and I took it at 213. That was my entry.
213. Okay.
Yeah.
So
I think it's like right after a red bar. I think it was.
okay.
Like, yeah.
Well, I would say that this would be the best place to buy it right here. So we're gonna say that you bought it here because that's a trend break. If you bought it here
Right, that's
on
where it
this, okay, yeah. Well, 213 could be here too. So what day did you buy it? Do you know? Was it 6.4 or was it 6.6?
No, I think I bought it on that second green bar.
Okay. Yep.
I don't have. Yeah.
Well, I
Yeah,
would say that's
and,
that's literally the best area you could have bought this because it's a trend break and it's not too far extended from the 10-day moving average. Because with a 24% ADR, if we pull this to the 10-day moving average from where you were, you still have double the average daily range before it'll break that 10-day moving average. So that you couldn't have bought it any better. You couldn't have bought it any better. Okay.
Yeah. Now, on that note, what I did was I took 1R late because I unfortunately something came up. Doesn't matter. I took 1R late at 2:45, and then I took 3R according to my lateness with 2:45 at 2:76.
276.
And then I had my last 15 shares ride up to 331, which is where I exited because I didn't realize how extended it was getting, and you spooked me. So I said, let me get out of here before I wind up losing anybody.
No,
well, because you brought it to my attention.
Well, yeah, it's
it
extended, but where do you think now? You know, you're gonna be like, well, why are you telling me this? But where should you have sold? Where do you think you should have sold? Like the real sell?
Oh, it would have been when the red bar hit the 10-day.
When it closed below the 10 days. So you actually should have sold at 318, right? Because then you're giving yourself more time to let this thing play, right? So I listen. I want to tell you something though right now. Killer buy, bro. Killer trade. You flipping destroyed this trade, dude. So I can't give you too much shit for this, okay? But don't say I scared you out because it's extended. Don't say that because that's what we're playing. You literally just played a momentum stock. Big push up, a pullback, forming a trend, a bounce following a 10-day moving average. You can see it's following the 10-day, and then boom, it breaks up through. I don't see the volume here. I hope you bought it on volume when you bought this. And then boom, you took out at 2R, you took out at 3R, and it looks like you took out at 5R. Okay, so that's a great trade. You know, the only thing I would say, because I was doing the same thing, and then this stock could have just kept ripping. It could have kept ripping higher. So just keep that in mind, that if you get in a perfect trade, let it be a perfect sell. Okay, so awesome trade, dude. Awesome trade. You want to go over one bad one, and then I think we're gonna have to close up shop.
Absolutely.
So what do you got?
Yeah, CRDL.
CRDL. I remember this one.
Yeah.
Okay.
My entry here was 264.
264?
Yeah, the lower day that I was using was 255, I believe. And I went in with 30 shares.
264?
Okay. Yeah.
Okay.
You know, I should have made the note of putting down the date in the spreadsheet.
I would like to know the date. We're going to assume it was right here.
Yeah. So it turned on me fast enough, hitting the stop loss, because that's what it did. My stop loss was too tight, so I didn't have a chance to ride, and I only lost $2.70.
Okay.
On the trade before that we just spoke about, I made like 39.
That's awesome, man.
So
that's awesome.
So
it's
it was
not
a good trade off nowhere.
Right. Well, we do want to keep in mind it's not about how much you make. It's really about the process. Because if you stick with the process, go ahead.
Exactly.
Yeah. Okay.
What I wanted to say was that first trade was my first trade using this process. Because remember, I waited like a month or so till I really got it, and then the second trade worked.
If you would have
as
taken
far as I
this
was
trade
concerned,
here,
according to plan, I was happy with the loss.
Yeah. If you would have taken this trade on 610, And you may have. That's why you need to know. You could have said, well, here's our trend, here's our breakout, and then if we have an understanding that we're going to use the low of the day is 5.57% on a 10 ADR stock, then I would say, hey, that's a good trade, you know. And then it moves up higher. You're taking 1R here at $2.82. You might take a second R if it made it to $3.82, but it didn't. And then it came right back down and stopped you out. It could have been a profitable trade if you would have taken it on the trend break on volume at 265. Okay, so that could have been a profitable trade. And you can see here, we've also marked this out multiple times. Trend break here, base break here. There was multiple entries on CRDL, and it's in a hot sector, healthcare, which is therapeutics. So I appreciate you bringing that up because I haven't looked at CRDL in a little while. But now it's breaking down. It's below a 50-day moving average. I don't want anything to do with this piece of shit stock.
I have one more quick.
All right, Dan Bob.
Trevor is asking about DBD.
DBD?
Oh, Daniel, yeah.
Yeah,
Dan
okay. Dan Bob Dan. DBD. Sure. All right, so let's go over this real quick, guys. The first thing I notice, if you look at my screen, let me move myself out of the way. On my screen right here, you'll see it's an ADR of 2.7%. Okay, I don't. What's that?
He was using my initials.
Oh, yes. DBD, Dan Bob, Bob Dan. We need DBBD, though.
Never mind. I'm slow. It's been a long day.
Oh, dude, me too, man. Me too, but it's all good. But this is Diebold. Let's see what sector this is first. So DBD. So this is an electric technology. So we know technology is hot. So that's a good sector, okay? We also know that, well, let's just take a look. What's the RS rating on this? So the RS rating on this is 98. So that's 2 pluses, right? We know it's in a hot sector. We know it's in a relatively strong stock, but we know it's a slower mover. At 2.7%, it's not going to make you millions of dollars, okay? It's not going to make you a lot of money. We want to shoot for over 4%. I don't play any. Now, you can be in slower movers if you're a longer term investor or a bigger swing trader, if you're using a 50-day moving average, I guess. But you really want to be in something that moves faster. Now, I will say this thing started off very nice on earnings. It blew earnings out of water and just ripped up to the north side, right? It ripped up to the north side and it created this base out top, and then it pulled right on back. Now, it formed this nice trend line right here, and you can see it's not following any moving averages. So I have really nothing to go off of here. Now, if it pulled back and started riding this 21, riding this 30, or riding this 50-day moving average, I would say, yeah, this might be pretty interesting. Now, if you're okay to be in these slower moving stocks, you need to understand the 10 is overturning this 21-day moving average. So it's starting to look pretty sloppy here. So what I want you to do is keep this on your watch list, Dan, Bob, Dan, or actually just Bob Trevor. That's going to get confusing one day. You can keep this on your watch list because you might have yourself a trend breakout here. But this isn't my A+ setup. This is far from it, actually, because it's not getting tight, right? We've had these previous run-ups. It's a strong stock, but I can't play it off this. I can't. Now, if you've seen something like this, check this out. This is our base breakout strategy. And again, I'm still not going to play this stock. Why? Because that's too slow of a mover, okay? But if you would have played this base breakout where you get a big push up, a pullback, and then it bounces for over 2 months and then breaks that psychological area of $20 on volume, yes, that's a trade. And look, it doesn't close below the 10-day moving average until it makes it all the way up here to 28.30. So if we measure that movement from this low to that area up top there, and it would have closed at 28.30, that's a 45.50% move. That's what we're looking for. That's what we're looking for. Now, if we come from here and we come back up here, look at, there is another base breakout right here. Oh, wouldn't you know? And then look, this is in that $29 area. It breaks above that $29 area on volume, as you can see right here, on higher than average volume. And then look, it doesn't close below the 10-day moving average until it gets right here at 30.33. So we measure that. This base breakout, if you would have caught it just perfect, and it closed below the 10-day, and you would exit out here. That's another 3.78%. Okay. Now, if you wanted to, because it's a slower mover, you could have seen, hey, it's following the 21-day moving average. Okay. And say you used the low of previous day, which would have been 28.25. You could have used this to close out below right here. That would have been 11% move. So we have to figure out which moving averages are working. This is a 10-day moving average that's working, but this is a 21 that's working. So depending on how you want to calculate your risk. But this here, it's not following anything like it was. I'm not seeing a base breakout anymore, and this trend breakout isn't just A+ setup, okay? So that's my idea on it. You might still find that this is tradable, and it might continue up higher, but it's not a trade for me personally, all right? I hope you guys learned a little bit from this. I really, really do. And I really hope that we can do more of these, because these are very, very helpful, especially for newer traders. Will, I seen that you just joined us. I'm going to upload this to YouTube if you want to watch it. We are actually just getting to an end. But guys, I really appreciate each and every one of you being here. Wednesday, we're going to do a little bit of study time. We'll do either some reading out of a psychology book, or we'll go over a biography. I haven't decided what I want to do yet, but I got all day to figure it out. But I promise I'll bring you guys the hot heat, baby. Because if you can't handle the heat, you get out of the flipping kitchen, right, Will? You know what I'm talking about, baby. So, guys, thank you so much for being here. I really appreciate you. I'm going to end this here, but I'm going to stay in the Discord for any further questions. So thank you guys so much.